In this video, I want to go over the action from Wednesday, September 14th. I want to go over the trades that I took, and I also want to go over the action because there was a lot of different trading scenarios and technical tricks and tips that I'm going to get into on this video that I'm confident is going to help you all take better setups in the future. I usually do these types of videos for Trade members, but there was just too much good information that I know a lot of people are going to get a lot of use out of, and I haven't done one of these recap videos in a while. So if you are new, I would appreciate it if you could just subscribe to the channel. I would really appreciate that. The first thing I want to explain is the S&P 500. We had CPI data this week, and we had a very, very large sell-off. I think it was the largest sell-off so far this year, and maybe the top 5 in the past few years. But prior to this, the market was making higher highs, putting in higher lows, and then we hit this 4148 supply zone. Price precedes news. We had negative news that affected the market inside of supply, and we had a very, very large sell-off, putting in lower lows and putting in lower highs, where every single time the market tried to move up on the S&P 500, we failed and we kept moving lower. On my Instagram, at Ameritrade, I'm going to post a link in the description below. I definitely recommend following me on here. I posted a picture yesterday on how the market had an all-day sell-off and the key signs to look for. This is a perfect example. We did not find any bids, and we had failed rallies where every time the market tried to move higher, we failed as buyers did not show any response, and this is a good sign for continuation to the downside. Take your time to look at this post and read the caption on it because it'll definitely give you good insight. But with that known, the market had a very large aggressive sell-off and buyers failed to prove themselves, and there was very, very strong weakness in the market where every time the market tried to move higher, we kept moving lower. So now that we understand this and we know the sell-off from the day prior yesterday, very, very weak action, extremely, extremely weak. I want to highlight the setup on Tesla because the Tesla setup was relatively stronger than what we saw. So on the S&P 500, very large sell-off. Yet on Tesla on Tuesday, September 19th, Tesla, if I pull this up here, was not as weak as the S&P 500 was. Yes, we had that overnight sell-off. Yes, we dropped during the day on Tesla. But if you look how weak the S&P 500 was compared to Tesla, Tesla showed what I call relative strength. Now, relative strength means when this equity is exhibiting strength compared to the overall indice that market is in. Tesla has I think, 2% weight on the S&P 500, whereas Apple has, let's say, 7%. So Tesla has a decent in the top 5 weighted index, or the top 5 weighted stock in this index. And if Tesla is not relatively weak with the S&P 500, then I know it's relatively stronger. We could clearly see that when in the first 30 minutes of the open on the S&P 500, we sold off putting in lower lows and lower highs. Tesla put in higher highs and higher lows. So right off the bat on the 13th, Tesla was relatively stronger. Then we dipped down with the S&P 500, right? So these charts are identical right now. And then the S&P kept selling off, breaking the low and closing near the low. Whereas Tesla, when the market bounced around 12 o'clock, Tesla also bounced, and the pullback was very shallow, failed to break the previous low, and did not even close near the low a day, or at the low a day for that day. We closed above the previous low. So from these two charts, the right being the S&P and the left being Tesla, Tesla obviously showing relative strength. Now, on an intraday basis now, the following day, when I took this trade on September 14th, Tesla was showing relative strength. Tesla was aggressively rallying while the S&P in the first 5 minutes was selling off, and the S&P really wasn't too strong just yet compared to how Tesla was in the morning. When I see this now, not only the day prior, but the day of, I know Tesla is showing relative strength, and this is something that I'm closely watching because if the market, specifically the S&P 500, does bounce, Tesla is going to have a high odd of also bouncing. So in the Discord, this is the intraday commentary tab. This is essentially where I update my thoughts throughout the day and what I'm watching in real time as the market's developing. This isn't hindsight trading. This is in real time. And exactly when I see something of interest, I post it in here for all members to see. So I said, despite the large market sell-off yesterday, Tesla showed signs of relative strength. The market sold off, but Tesla rallied and did not follow as weak as the market did. Only if the market could gain some traction to the upside, I'm going to expect Tesla to have a stronger rally as it's been exhibiting relative strength. I don't have any levels on it right now, but I will update you all when I could come up with a plan. 15 minutes later, I saw something I really liked on Tesla, and that was the strong buying volume we saw prior to the breakout. So essentially, Tesla had a gap on the chart, meaning we had a gap down from that large sell-off on Tuesday, the day prior. We had that large sell-off, that large gap down, and Tesla had a high, which also kind of coincided with supply. I'm actually going to mark it for you all in this area right here. Tesla had supply that I knew if we could get above this 297.50, which was the previous day high, we basically had white space from here all the way down from what I'm marking from the previous day close right here at 304. We didn't have anything really stopping us from hitting 304, and specifically the 300 whole number. It's a whole psychological number. So with this in mind, we identified strong volume on Tesla prior to the breakout. If you're playing a breakout, especially a play with relative strength, you want to make sure that name is exhibiting volume prior to the breakout. It is vital to have volume prior to the breakout because what this is going to exhibit is interest showing in the market. So in the Discord, I put, I'm watching Tesla to pull back here from yesterday's highs. This was at 9:49 a.m. before attempting to break it to fill the gap. Relative strength, if we can consolidate and pull back and break above 297.50, I'm going to be interested in playing calls targeting 300. Now that I look back at this trade, I probably really should have targeted 304 because that was the gap fill. But I targeted 300 because that was the whole number psychological resistance. So that was at 9:49 a.m. Eastern. That was when the market looked just like this at 9:49. So the reason why I wanted a pullback and I wanted consolidation was a lot of traders, and this is why I think a lot of traders fail, especially breakout ones, is they try to get long immediately after the level breaks. Okay, not 297.50, after we just rallied about 8 points from the low with no signs of pullbacks or really consolidation besides this right here. I'm going to get long up here, right? So if I get long automatically up here, where's my analysis going to be incorrect and where am I going to stop out of this position, especially that volume now is dying out near the high. So we hit 297.50. I'm not a fan of getting long after already a stronger move prior to the breakout, which is why I always like consolidations. If we don't get consolidations or we don't get strong volume, sometimes I'll use that break and retest strategy that I actually made a video on a few days ago. So at 9:49, right when the market looked like this, I said I want to see the market pull back here and consolidate and then break 297.50, and I'm going to be interested in playing calls. The market consolidated in this area. We consolidated. I love to see the market balance out like this. Very similar to what we saw right here. We're seeing the same exact thing at this point where I just highlighted up here. Then we start moving towards the high, and I got in right here prior to this 297.50 breakout, speculating that we were going to break out because I knew if we could get above it, we're going to hit this $300 mark right here. In the Discord, I said, the market's balanced. If we could rally here, Tesla is going to be extremely strong. At 9:53, I said I'm watching Tesla 300 calls for Friday's expiration. Then I said 9:58, I'm in this trade. So I said I got in calls, 9:58. Very strong buying volume, as you can see right here. Very nice candle breaking through that level. And now it's just a simple trade. Volume came in. We exhibited relative strength. The S&P 500 is also trying to break the high and go for that resistance at 3976. We're holding up. So despite it selling off and not being very strong, Tesla now is breaking the high. So it's exhibiting not only relative strength the day prior, but also intraday on the 14th of Wednesday. The next 4 minutes, $300 hits, and I get out my full position. It was a 50% return in 4 minutes. Awesome trade, stress-free. The market never pulled back, and it was just a simple, quick scalp for a solid reason for entering and a okay reason for exiting now that I look back on this trade. But then we pulled back. We held VWAP. We held that 297.50 area. And that 304 target that I mentioned earlier could have probably been a better target. But I'll never complain about 50% in 4 minutes, stress-free and, no worry at all with a high-quality setup. Finally, a very nice high-quality setup. That was on Tesla. I hope that made sense. And I think, so I said I was in, and then at 10:02, target hit. I'm out here, I said, as soon as $300 hit. Clear relative strength. So if we look at Google, which was red on the day, Apple was only up 1%. Microsoft and Amazon were basically break even. Tesla on the day was up 2.5%. Clear relative strength compared to the overall top 5 weighted names in the S&P 500. Soon as the $300 target hit, I said I'm out of this trade. Posted my fills. And relative strength, meaning Tesla was stronger than the weakness on the market yesterday. Tesla had something what I call VVM. It's just a term that I use to gauge interest and participation in the market. If you're trading a breakout, you want to make sure you have interest and participation because that means other traders are interested in that move. And then I knew if you get above the previous day high, there was nothing stopping us from rallying, especially if the S&P rallied higher with it. Very simple analysis. Also on my Instagram, on Wednesday, I posted a very simple scalping strategy video. I definitely recommend checking that out. This is essentially what we were watching for on the S&P 500 to basically what I call break out of balance, and I'm going to explain that. So in the pre-market plan, I was not very interested in getting long on the first sign of buying. I wanted buyers to really prove themselves first, especially if you've seen my last Instagram post about the all-day sell-off and that caption that I wrote out for. So the bullish plan was if we get above 3976, I'm going to be open to looking to play long, scalping the supply zone above that formed the day prior. And to the downside, we had a bearish plan as well. So the market opened up, and the whole overnight session, we were very flat and we were very, very balanced. The supply zone came from the day prior's sell-off. This little leg down is the sell-off, whereas Tesla was, extremely strong and rallying. Then we consolidated all overnight session. Now, I want to basically just go step by step in the intraday commentary tab so you all understand what I was watching. So I said, bigger picture, we're consolidating in this tight range. The market is balanced inside of it. This is when I said watch Tesla calls. And now what's important to highlight here is the VIX. I don't use the VIX very often in my analysis. My good buddy Dylan uses it all the time. There's a video in the Discord on it as well. But the 27 and the 27.2 range is a still very, very important level that has been on watch. And we were watching it pretty much all day today and all day the day prior. So pulling up the VIX here. This is a daily chart. We could see we have clear resistance on the VIX. One time right here. Right? See if it loads. Another 4 times right here. And then the day prior on that S&P sell-off, the VIX rallied right inside of this 27, 20-ish area. That multiple different times we've tested this area, and it's a key level that the market, the VIX specifically, has rejected many times and has caused the market to rally from that, specifically the S&P. With this in mind, the VIX needed to break out of this level if the S&P wanted to sell off, and the VIX needed to reject that level if the market wanted to bounce. Here's the test. The VIX sold off, VIX sold off, VIX sold off every time we tested it. This was the Tesla call, said I'm out. The S&P, after that whole Tesla trade, was still consolidating inside of that range. In my opinion, we're getting ready to break out of this range. There are 2 things which are key and what I look for the market to balance out of this range. This is what I want to go over for this lesson. The first thing that I look for is a break out of balance and strong buying or selling out of that to maintain above or below the range for continuation in that direction. Basically what I mean is if we break, or let me actually show you what I mean by the balance range, a high here and a low here. If we broke out of this range, right, broke out of it with strong buying volume, maybe we came back, we've retested it, held it, and then started moving higher, this would have been a high quality setup to take the market long, targeting the supply zone above. Same thing for the downside. If we broke below it, stayed below it, maintained and built volume below the range, we would have a high chance of consolidating and selling off even further below that balance range. However, the second thing that I look for is if we break out of the range but move back inside of the range, almost like it's peaking its head above or below the balance, that indicates a possible reversal, which is what I call a failed breakout out of balance. Picture like a whack-a-mole or something, like peeking its head above the ground, and someone's there just whacking it as soon as the head peeks its head above the level or below the level. Something's there just not agreeing with it. When we see that, the whack-a-mole is going to go back inside of the hole, and it's going to move back inside of the range, specifically talking about the market, if you understand that analogy. So in this case, that's essentially what I was watching. And what I was watching for was this VIX level basically to break above 27 bucks, 27.20, and the bearish plan could have started to work out if we got above that level. I even said, watching the VIX at that level, I'm going to be watching my bearish plan from the pre-market plan if we could break below that level. My bearish plan was a break below 3932, brings a sell-off into the 3902 demand. However, we broke out of this range, right? We broke below this white line, and I'm actually going to go to a 1-minute chart. This is a classic example of a break out of balance, failing, moving back inside of the range, and this would provide a good opportunity to scalp the market to the long side. The mole, peeked its head below the hole. There were buyers down here, didn't like it, started hitting the whack-a-mole. The whack-a-mole went back inside of the range, and this is going to indicate a possible reversal to the upside. What the VIX looked like at this point, now going to an intraday time frame, was we rejected the supply zone again. We never got above that 2720 area that we were watching the market to get above. What this is going to indicate, and this is a good sign, especially being a retail trader, is majority of traders are seeing the market selling off like this, expecting continuation to the downside, especially with the day prior to that sell-off, not realizing VIX still is at its key level that's been rejecting every single time, indicating a possible reversal because this was a break out of balance. Not only did we have the S&P, we also had the VIX to confirm it. And if you were watching the level 2 and time and sales, heavy bids stepping into the market and aggressive offers getting hit as we started moving up, this is a clear sign to take the market long. Stop loss below the low. Your target depends really how you trade. You could target VWAP, you could target the high, you could target the opposite side of balance. It really doesn't matter. It depends how you trade. But that's a classic example of a break out of balance and fail. Same exact thing to the upside. The market broke out of balance. Volume was very, very weak right here. And we started moving back inside of the range. And you could have capitalized on a short side sell-off. Wasn't as aggressive as the earlier rally, but closer to the end of the day, we began to sell off. Now, remember that VIX level again, right? We started breaking down around 215 and 315 is when the market really started trying to make new lows. If we look at the VIX at 215, this is what it looks like. Still inside of the supply zone. If we reject the supply zone and we move down on the VIX, the S&P is going to bounce. Or we're just not going to see continuation on the S&P. 315 occurs now, right? Look at 315. The VIX is now double topping while the S&P is breaking the low. Majority of retail traders got short below the low a day on the S&P 500. Even though we got below my 3932 level, we had no really convincing action below it. VIX was still inside of the supply zone, and we failed to break above 2720, and we lacked the short side continuation, indicating a possible reversal is imminent now that there are a bunch of short sellers trapped at the lows with heavy volume getting absorbed or just picked up by passive buy orders, patiently waiting to get filled, and then the market reversed going into the end of the day, and now we're testing the upper portion as I'm recording this video of the day prior. So just to go over this again, this 2720 area is vital now for VIX moving forward. And if we could start getting above this 2720 area, then I'll start expecting some downside continuation on it. But that's pretty much it on the analysis part. Keep your analysis simple and clean. Understand price and volume. It's the most leading indicator, and you'll have the most success with it if you develop a deep relationship with price and volume. With this being said, I want to just say something that in the Discord, I was extremely active this day. It was, for me at least, very easy. I wouldn't call it easy. It was just very clean action, and I read the market very fluently that I could take a high quality setup off of. Be transparent, I really haven't taken many high quality setups recently compared to what we have been seeing maybe 2 weeks ago, 3 weeks ago, a month ago. There were tons of high quality setups. It seemed like every day I was taking a really, really high quality setup. And the market has now been adapting, changing a little bit, where I've been finding less of quality setups. And a lot of people can't transition from, a lot of people had success 3 weeks ago or a month ago or 2 months ago, whatever the case may be. And when the market starts slowing down a little bit, not providing quality setups for their specific own edge, a lot of people try to force setups because they try to roll that momentum from their quality setups they took a few weeks ago or months ago. They try to roll that momentum forward when the market right now is not providing them with high quality setups. And what they do is they force low quality setups, or they force no setups at all, and they struggle because of it. So you have to only trade when not only you could read the market properly, you understand what's going on, you understand the market context, you understand the price and volume relationship, but you could also only trade when your edge is present and you could really get a good feel for the market, I want to say. And that feel is developed through screen time and experience, which is something that I stress all the time. So we went over the breakout of balance, responsive buying, responsive selling, especially when we add retail traders. And then we also went over the relative weakness on the S&P, or the relative strength on Tesla compared to the weakness on the S&P 500. I'm going to end the video on that note. If you learned something, like this video. Let's try to get 1,219 likes. If you've made it this far, I'd like to see who makes it to the end of these recaps. Comment if you have any questions, subscribe to the channel, and definitely check out the links in the description below if you want to be a part of the Discord. It is only available and included for Trade course members. Prices will be going up very, very soon by the time of this video ends.